Special segment Quarter Se Quarter Tak. Mangalam is joining in to tell us what to expect from the FMCG sector this quarter. Mangalam, over to you.
Well, as far as the FMCG sector is concerned, the consumer sector in India are currently facing the big twin problem of one, low demand and then high inflation as well. The Russia-Ukraine crisis has further aggravated already rising commodity prices, and price hikes which are led by inflation have actually hurt demand. In fact, now we understand that consumers have begun to downtrade their products to lower packs, and that would impact their margins as well. And rural India sees further signs of weakness. So in light of this, not only the fourth quarter results for the consumer sector are important, but margins as far as the management commentary is concerned in the first quarter will also be equally important to watch. And this is something that's been visible in the fourth quarter updates that we've got from the companies so far. There's been flat volumes for Godrej Consumer as well as Marico, and as far as Titan is concerned, we did see a decline in their jewelry business as well. So let's take a look at the raw material inflation itself. It's been high both year on year as well as quarter on quarter, be it in palm oil, crude oil related inputs which have seen a sharp spike, and even detergent inputs. Soda ash has surged almost 27% quarter on quarter. Year on year, it's a jump of over 160%. Only two commodities are in a deflation cycle, that is tea as well as copra, which is directionally a positive for Marico as well as Tata Consumer. But remember, weak consumer sentiment and inflation in other expenses will hurt their margins as well. Nevertheless, though less than what it would to all the other players. The street this time around is going with muted volume growth expectations for companies from across the board, with HUL actually likely to report a contraction in volumes. Most companies would still manage about single to low double-digit revenue growth, but that would largely be on account of price hikes, which actually won't flow into the profits because of input inflation. One stock that stands out is ITC, which has had a good run. It's at a 52-week high, and they're expected to report strong results from across their verticals. A large part of that is already in the price because most of the consumer stocks are down anywhere between 50 to 30% from their 52-week highs. And even as the valuations have contracted, they're still at elevated levels as compared to the other parts of the market. Case in point, something like Asian Paints still trades at 67 times, Nestle still trades at 64 times, and Titan still trades at 76 times.
Okay, got that, Mangalam. Thanks a lot for that, for giving us quick preview on the FMCG space. Well, we're joined by Naveen Trivedi, the AVP at Institutional Research at HDFC Securities, to run us through his expectations. Hi, Naveen. Thanks so much for joining in. Well, ITC, that's the one that's caught everyone by surprise. The memes take a backseat, and the stock, in fact, has been zooming ahead. What are the expectations out there in terms of numbers, and what's your current rating on the stock?
Yeah, hi. So good morning, everyone. So ITC, we remained positive since last 2 years, despite we were underweight on the sector. So from that point of view, we will keep saying that the valuation argument from ITC's point of view and the implied growth rates are quite low compared to the capability of the company. So this year we are expecting that when other companies are more on the deceleration side in terms of the growth and the margin side, ITC's most segments, even if you look at the last quarter also, we have seen a good amount of recovery in across your core business of cigarette, FMCG, and even the other businesses like paper and hotels. Our take here is that at an aggregate level, the recovery will sustain across segments, and compared to other sectors, other companies in this space, ITC on a relative basis will continue to outperform on our earnings side. So thereby the valuation gap from ITCs compared to others will narrow down, and thereby we remain positive on ITC as a counter.
Okay, Naveen, hi, good morning. We keep talking about commodity prices, but even on the volume front, there's quite a bit of slowdown that's felt because of the rural distress, right? So in that context, I mean, Mangalam was just telling us that Britannia, Dabur, Godrej Consumers all expected to post barely about 1% volume growth this time. Which is the stock that you would be cautious on the most?
So, Sonia, the point here is that suddenly the grammage reduction are impacting the volume side. On top of that, the high inflation is impacting the income levels, especially in the rural side. So they are suddenly downtrading with respect to the grammage side, the SKU side. So thereby, at an aggregate level, we are seeing volume deceleration massively. If you look at last 2 years, our take for the sector, we keep saying that earnings surprises will be limited from the FMCG side, and thereby the rich valuation will not sustain. especially from the context of the emerging new age brands like D2C and the other brands where we have seen a massive amount of growth. We will keep saying that the earnings side, especially in the top lines front, we are seeing more structural sort of a deceleration. Then thereby the valuation side argument will not be justified, which has been justified in the last 2 decades. So from that context point of view, we remain worried about categories which are more dependent on rural. So player like HUL, where the BPC is already under pressure since last couple of years. The further deceleration on the rural side will continue to impact their top line front.
So, Naveen, good morning. What would be your top picks, if any, in this space now?
So, Anuj, at an aggregate level, we are underweight on the sector. However, ITC remains our topic in this space. In other coverage companies, from absolute upside point of view, we don't find too much there. But on a relative context point of view, Dabur, Marico, GCPL are still on a positive side.
Okay. Do you by any chance track Jubilant Foodworks, Naveen?
So, on a relative point of view, if you look at cigarette, QSR, and the liquor company categories, where the recovery part is still in the favorable from the reported numbers point of view, QSR on a reported numbers point of view will still be better than the pure staple names. However, on the from the rating point of view, on the rich valuation side, we are negative.
Okay, you're negative on that. On these, some of these Tata Group stocks, so Tata Consumer, for example, the trend has been good so far, but once again, there's a double whammy of slower growth as well as, higher inflation concerns. Would it be a good buying opportunity if the dip worsens?
So, Sonia, Tata we don't cover, so I won't be able to give you any opinion on that.
Okay. Any other stocks that you cover that you'd like to point out that could be a good buy from a long-term investor standpoint?
So we keep saying that appliances within the consumption side are performing well. So from that point of view, since the summer has started really well even in the north market, the RAC part, which last 2 years we have seen massive amount of slowdown because of the lockdown. This year is expected to be very strong. Thereby the categories like RAC, fan, all the cooling products are supposed to do well. And thereby appliances stocks from structural point of view as well as the near-term earnings point of view seems to be on a relatively a better bet. Although margin side, there will still be a downside sort of a thing, but top line side, I would say appliances seems to be more on a relatively outperformance sort of a thing. So we remain positive on appliances as a category.
Okay, all right. Thanks so much, Naveen, for stopping by and filling us in with your view on a whole host of stocks. Look forward to chatting up with you rather soon. Well, it's been a good opening for the index. The Nifty Bank is the underperformer today. The breadth of the market firmly in favor of the number of stocks that are advancing. Close to around 4 stocks advancing for just 1 stock that's declining. And the Nifty holding with a gain of around 160 odd points. We're getting to that congestion zone. Remember, 17,150 will be the crucial level because the 200 DMA is out there. The 50 DMA as well is in that vicinity. For the time being, slip into a short break. On the other side, Mitesh